Hi, this is Nick Krehnke, licensed loan officer in the state of Washington. Here I am right here, and here's my phone number right here. I'm with TriStar Finance the last few years, and I just want to today show you the difference based on real life pricing. This is the 9th of July 2013. As far as the difference between higher rates and less closing costs versus lower rates and more closing costs, and what that break even is. Okay, so what this does is it feeds in all the pricing live of the different lenders, banks, and credit unions who we're approved with, like 70 of them, and it'll give us the best rates or best pricing depending on the parameters that we put in there. Okay, now this is a mobile home they're buying for $150,000. So these are the lenders that'll do it, and here's where their pricing is. So here's at 475, and you'll see it'll say the payment $755 a month for all of them. But you'll notice there's a big difference between what they will cover for closing costs. Now bear in mind this is gross amount, so it's not all available, but this just shows you. So you go a high of $68.76 down to some lenders that'll charge you actually a buy down at the same rate. So when you go up or down here, before you click on the exploded view here, hold on, what it shows here is the pricing of the best lender, bank, or credit union at that rate. And then when you click on it like I did here, then it'll pop up stuff and it'll show you. Okay, so we were at 475, now we're at 46. So the difference in the payment here is $11. But the best, as far as like gross amount we have to cover for your closing costs, $6,800 versus $56. So that's about $1,200. Actually, it's more than $1,200 savings. But I'll just be a nice guy and round it down. So $1,200 is what we have less to work with. But you're saving $11 a month. So let's figure out how many months does that take to break even. 109 months to break even. So that's the thing, is is it worth $1,200 to save $11 a month? I think not. Because when you get the house, I mean, you think in 109 months, what is that? 109 divided by 12. That's over 9 years. So you always have to ask yourself, based on history, of real life situation, if I buy a house today, within the next 9 years, are rates possibly going to drop below where they are today, thereby negating this break even? History says absolutely. And then let's drop down again to a lower rate again. No, I don't want to do any of that. Okay, so at 4.5, right? Okay, here's another. It's another 11. Your payment drops another $11 a month. Okay, here you only lose out on about $800. So 48 and 56. So yeah, so it's $800. Let's see, so and you're saving another $11 a month. How many months to break even? 72. So that's 6 years to break even. Again, you have to look at it and say, if I close my loan today, in 6 years, is there a chance that rates are going to drop below where they are today? History says yes. So this is just another point. As far as do your loans, no points, no fees, nothing added to your loan, absolutely whenever possible. And it doesn't really matter how long you're going to stay in the house and all this other stuff, because of how the market works. If you do a loan for no points and no fees, rates drop, then do a refi for no points and no fees and then save money. It doesn't matter, because if you don't pay anything into the loan, nothing's added to your loan balance or anything, there's no break even to calculate. So anyhow, once again, 425-202-5655, that's me right here, and some realtors, good friends who I've worked with, and a happy client with their cookie basket at closing. So anyhow, give me a call, 425-202-5655. And Nick Krehnke again, your new friend in the loan business. Take care.